So good morning, everybody. My name is Scott Moskol. I co-chair our cannabis advisory practice with Frank Siegel, as well as co-chair our restructuring practice at Burns & Levinson. I'm fortunate and privileged enough to be able to moderate this panel with 6 such distinguished guests, who I will introduce in a second. I just want to give an overarching kind of viewpoint of what we're going to be talking about. Many of these panels deal with, we go to these cannabis conferences, it's about the operators themselves. But in order for the operators to be a success, it takes an ecosystem, for lack of a better word. And for this ecosystem to succeed and thrive, we need basically all the folks on this panel are crucial and key components to that. Everyone here being, we might turn them as an ancillary, or their companies as ancillary companies. I don't think anyone here actually touches the plant for work purposes anyways, what you do in your private business. We'll leave it at that. But anyways, let me make a quick introduction of our panelists, and then we can kind of jump in. First of all, we have Carmen Lam from KushCo Holdings. Carmen is Senior Vice President of Business Development. There's much longer bios in your program book, and I don't want to take any time from the panelists. Jacques Santucci is principal at Nucleus One, as well as Stremo. Nucleus One, Jacques wears 2 hats. Nucleus One is a consulting advisory company, dealing not just with licensing, but also operations and certainly financial and turnaround issues. And secondly, Stremo, which we'll tell a little bit more about, is a high-tech solution that combines receipt to sale and works with you in order for the operator to keep track of money in, money out, costs, expenses. Next, Josh Smart from Hub International. Josh is the North American practice leader and chief officer for agribusiness, food, and cannabis, which, to put in more simple terms, Josh helps the cannabis industry by selling them insurance that actually achieves its purposes and provides coverage for this industry, whereas a lot of policies that are out there maybe aren't as comprehensive as one might believe. Mary Amato, she is a partner with CohnReznick. She focuses obviously on cannabis, but also construction and commercial real estate, and has been doing a lot of work with, in the last few years, with MSOs, single state operators, regional players. Continuing down the line, we have Tina Sbrega. She is President and CEO of GFA Federal Credit Union. GFA Federal Credit Union was the first financial institution in the Commonwealth to publicly announce that they would be banking and accepting recreational adult use deposits as well as medicinal deposits. And Tina has been a vanguard in this state with respect to banking issues. And last but not least, although it might seem like we've introduced the entire room here, Patrick Ryder, also from Hub International. Patrick is the Vice President of Executive Liability Practice, and what that means is, I think for folks in the room, is he has a focus on directors and officers liability insurance, as well as E&O or errors and omission liability insurance, which pretty much everyone here with a board or a group of officers needs to understand that, again, some of the policies that are out there may not be as comprehensive that you may think you would, as if you were in a sort of different other business. Let me start with Carmen. So the previous session, we talked a little bit about the vape crisis. And KushCo obviously is one of the country's leading producers of vaping products. Can you just kind of give us a little bit of insight from your company perspective? How has this, I don't even know if it's really a crisis, but how has this crisis affected your business, and where do you see it maybe going?
Yeah, so thank you for that, Scott. So yes, Kush is the leading supplier of C-Cell products. C-Cell is the leading manufacturer of vape hardware in the cannabis space. We're really excited and proud to be a part of be their partner because they're one of the only or few GMP certified, ISO certified manufacturers of vape hardware. We see that, in Massachusetts, they banned the use of vape, which is not ideal. That is not what we want from our state legislators. We feel that, marijuana or cannabis or vape needs to be, studied, researched. Vaping has been around for a really long time, whether you think about it in the e-cig realm or in the cannabis space. People have been vaping for over 10 years in e-cig and about over 5 years in cannabis, and we obviously know these issues, as unfortunate as they are, they just recently happened within this year. CNBC has done a really great special on investigating and doing a deeper dive, and we know that this is an illicit black market issue. So for us, our message to our legislators is use us, ask us what's going on. There's a huge problem with counterfeiting products of C-Cell in the market. And we should ask these patients and end users to shop legal instead of not providing them any kind of access at all.
And with respect to the counterfeiting issue, I think I read recently that one or a few of the alleged vape pens that were involved with the illnesses was actually a counterfeit KushCo vape product. So how do you handle that? I mean, how do you get ahead of the issue that folks allegedly who are using your product, but it's a black market,
a knockoff version of our product,
yeah.
Right? So that is really challenging. So we're really excited about a recent partnership with De La Rue. We were already working on this partnership months before this vape crisis had unfolded, and unfortunately, we're really expediting this initiative. But De La Rue is one of the leading suppliers of anti-counterfeit and product authentication products. And essentially, we want to make it easier for the consumers to be able to identify whether they're using a black market product or actual real, cartridge bought from a legal market. And just like you go into the supermarket, like we're all busy, we don't want to read all the ingredients. You kind of just want a symbol that says USDA or GMO free. So we're working with a lot of different cannabis organizations and institutions to either create themselves their own authentication sticker, and one for ourselves where consumers can just look at the product and know that there's full track and trace. This product came from a legal market, and it's safe to consume.
So there, the last I think week and a half, we've seen other states. I think Oregon has had temporary, at least unflavored e-vape products. Other states are contemplating this. The CDC has issued a statement that maybe THC vaping isn't the safest, although they do at least make an allusion to the fact that a lot of it is from the black market vaping. What's KushCo doing on a national basis to promote this education of the product in the industry to sort of these regulators and/or government officials?
Yeah, so...
And how can we help? How can this group help?
For us, we have been speaking with all of the legislators, including Lori Ajax and Governor Newsom in California, because we know California kind of sets the trend for a lot of these other states to follow. And our message to them is, we need to be educating the public to buy through legal channels. With the operators themselves, we're asking them to graduate up into, using only GMP certified, ISO certified hardware and products, so that, there's that medical grade protection for the end users. We're asking the same things at the terpenes level, that you're only using terpenes providers that are GMP and ISO certified. And for us, we're really excited to launch our new stainless steel tanks that actually, most extractors that make these cartridges are using these carbon steel tanks to, use a solvent, whether it's butane or, propane, to create the distillate. and the oil, and we're asking that, you know, these state legislators adopt these stainless steel tanks that harbor no particles or any kind of contamination, so that from the actual extraction all the way to the end of the packaging and the De La Rue sticker that goes on top, that you have this secure chain that users know, like, when I'm picking up this product, you know, I know it's safe.
Oh, great, great. Now, I'm just going to turn to Jacques for a second. And Jacques, you wear multiple hats, but certainly with your Stremo software product, technology and data seems to be extremely important to the industry. Maybe you can just talk a little bit about what your Stremo software platform does.
I'd like to make a segue with what Carmen was saying. I think what we're seeing here is a lack of standards. Yeah. And I started, you know, in the cannabis industry when we started Wellness Connection of Maine, you know, back in 2010. And then since then, with Nucleus, our consulting firm, we've been involved all around the country: Maine, Massachusetts, Connecticut, Hawaii, Ohio, and a lot of other states. And what we've seen and what we've been working towards is having standards, vape pens, but also how you cultivate, how you package, how you hire people, how you do banking and insurance, and that's what's been missing in the industry. So through our consulting firm, we've been educating our clients on how to use the best standards and best practices to be successful, and that's how we started Stremo a few years ago. Our business platform software, as I see it, is the second generation of what technology is on the market now. Most of the products that are on the market don't go towards standards. They just go towards just make it happen and try to be compliant as much as you can, but none of them are really dealing with the compliance at a higher level. For sure, they don't deal with costing and how you gather data to have a better decision-making process. So what Stremo is a business platform that's going to go beyond what they call seed to sell, which I never really like that term, but gathering data so people can go to or operators can go to the next level and have standards and understand what cost is. You know, a lot of companies are talking about the cost per gram or the cost, you know, to package, but, you know, and I'm sure, you know, our colleague at CohnReznick can attest to it. You know, how do you calculate all those things? You know, a lot of industries have standards. We don't have it, and that's where we're going towards.
So turning to sort of your consulting side now.
Yep.
When we talk about standards and lack thereof, yes, you moved your face. There we go. I know that you and I come from a very similar turnaround background from the old days, but it seems to me that maybe because of these lack of standards, amongst other reasons, the cannabis industry might be starting to see a need for workout/turnaround experts. I'm just wondering what you've seen, you know, from your perspective as a consultant to the industry, but also as someone who has been a chief restructuring officer, for example.
Yeah, so my background has been business management and turnarounds for the past 15 years, if not more. And so I always saw an opportunity in the cannabis industry to provide services for stronger businesses. Just like any other industries, you know, there's professional services that help the industry get stronger. And we are seeing more and more distress in some companies. Some people got licenses that are not going anywhere, either because they lack financing, but usually it's because they don't have a business model that actually can attract financing. Some licenses got off the ground and stopped halfway, usually because their business model was not making sense, or they didn't attract the right talent to do it. So I think we're starting to see, and Scott and I were talking about it last night, we're starting to see a turnaround practice around the cannabis industry to help investors get their money back and more, and then the state also have stronger operators, so we build a stronger industry.
And in fact, I think one of our first matters together was I would call it a workout, more of a traditional composition where we basically had to negotiate with several of the creditors of this cannabis operator in order for them to take a discount or take payment over time in order for the company to have enough time to raise more money and to survive and move on to the next level. Do you think you were going to be seeing more of these?
Well, yeah, that's a good example. So that was, what, 3-4 years ago maybe now? And that company would have gone through bankruptcy in any other industries. Because when you buy for $500,000 of goods and you don't pay for it, usually people go after you. And it just doesn't end up well. But in this case, because the bankruptcy laws don't apply to the cannabis industry, Scott and I, we had to come up with more of a turnaround, creative way of dealing with the issue, and actually the company is still active. I think we're going to see more of those cases, hopefully not like this, but I think we're going to see more of those situations where people are shooting for the moon and they don't realize that margins are getting smaller. I think in the previous panel we talked about, I think Jason mentioned the fact that margins are going down. People are expecting high sales, high margins. They don't account for changes in the laws. They don't account for change in the competition. And I think we're going to see more companies getting in a dead end where either they don't acquire the license they thought, or they don't see the sales. I see it already in Maine. That's where I live, and that's where we started. Maine is going from medical to adult use with a lot of caregivers, and I think there's like 3,000 caregivers in Maine, and they're all expecting to turn into adult use. And I think only now they're realizing that they have to invest in technology, they have to invest in people, they may have to pay taxes, and they really didn't anticipate it. And some investors invested in their licenses, and I think we're going to see investors, lenders, employees pushing those companies in corners that they weren't expecting.
Great. And, well, not great for the companies, but thank you for that analysis. And Josh, continuing on this theme of standards, I know, you and Hub sell a variety of different insurance products, but it seems to me that if the insurance industry as a whole, with respect to the cannabis industry, there's a wide array of products that have maybe coverage or maybe not for the cannabis industry. I've seen a bunch of policies where you think you have coverage, and then there's this giant exclusion for anything that relates to an intentional act that's criminal, which is,
Sure.
As we know, it's federally illegal to grow, cultivate, sell cannabis. So how has Hub dealt with that? What products do you guys actually have available for many of our folks here on the liability side? GL
Yeah,
and whatnot.
no, absolutely. My first rule of compliance is I never sit on a panel with anyone with a great accent and then immediately follow them, because that's always a bad thing for me.
Well,
but
you have your partner there. You should have just switched seats.
It's true. Yeah, it's true. I'll let Patrick talk specifically about the directors and officers and how we're accomplishing that. But from what we do on the property and liability standpoint, there is a lot of misconception in the marketplace, and there's a lot of insurance carriers who put out marginal products at a very high premium. And if the broker it just doesn't understand what they're looking at and doesn't read the exclusions, they might go to a wholesaler that says, no, we do cannabis, and here's a policy for that will cover your cultivator or your processor or your manufacturer, and then turn around and there will be exclusions for ingestible products, or there will be exclusions for illegal products or anything of the sort. So you have to be careful of those exclusions, as you mentioned, because they are, many times they can be negotiated, they can be discussed, they can be reviewed, and it is more about knowing the exclusions than it is knowing the channels to buy that policy, because a lot of good carriers start with bad exclusions, and it's not meant to be misleading or kind of cloak and dagger, but it's just that if the underwriter that you're working with doesn't understand what they're doing, then they're going to pass down bad policies. So it is possible to get an expensive carrier that's going to charge an arm and a leg, and you have to pay that cannabis tax for products liability, for property, that are going to exclude the things you're actually doing. And we find that that is our wedge more often than not when we meet with prospects is, what are you doing on the contractual side with your clients and with your subcontractors, and how are you engaging there, but also what are in those policies and forms that are specifically, most business owners and most of you in the room have a general passive knowledge of insurance, and where we've been really successful in the 33 states and 6 countries that we sell into is on understanding those policy forms and the intricacies there, and that's something that, and to tee Patrick up a bit, that's something that he specializes in as a niche understanding there for directors and officers, and engaging with the investment situations that you find yourselves in on the PE side and other sides.
So the kind of turn, I'm probably going to put you on the spot for a second, but turning to this vape issue.
Yeah.
You mentioned you sell product liability policies.
Right.
I mean, you know your policies better than, well, I've never read one, but how will your policies cover what I could only imagine will soon be a barrage of product liability claims as a result of this? I mean, I could see a class action coming down the pike at some point.
Yeah, it's
not that I want one, but
no, of course, it's 100% expected, and we saw this coming. Not necessarily the vape product crisis, I guess if you want to put it that way, but we saw that there were going to be products that were going to hit the market that were going to come under scrutiny, probably undue scrutiny, and that we're going to create some problems for our clients and for the people on the insurance buying side. And so your product's liability coverage will pick that up for the bodily injury and property damage if you're actually liable for the thing that you put in the market. On the other side of that is, there's product recall policies that can trigger, and that can have some reputational coverage on how you can rebuild in a reputational sense. So you kind of have a multifaceted approach. If we were working with Kush on this, and you don't have anything in the market that you're recalling, but if it came to that and you had to come out and recall part of your product, even on a voluntary basis, you might want to have a trigger on that policy that would allow for Kush to recall product that is not actually wrong or it has a defect, but you might need to pull that back just out of reputational observance, which can be really important. So you don't necessarily have to have bodily injury or property damage like we're seeing in the case of Washington State, but you can have other policies that can help trigger and help protect, even in the reputational sense, that can provide some help.
Well, unfortunately, I think this industry is going to be needing more and more of your services, and just moving down the line to Mary, and we're talking about standards. So as everyone knows, and maybe you can explain a little bit more, the cannabis industry has been saddled with this 280E tax issue. And I know you're working daily on trying to address it, minimize it, make sure it's actually being properly reported, or I know it's not a tax, but it's a lack of deductions. I wonder maybe you can just kind of give a little overview of the actual issues that arise because of cannabis companies in our tax code.
Okay. I think 280E has been in place for many years, and we do find that all of our clients need guidance on this. And if you look at the case law that exists to date, as this is new and developing, a lot of those cases fell down on just poor housekeeping. And so for us, although the business could be considered federally illegal, you still need to report your income taxes, right? They might disallow your deductions, but you're still required to file those taxes. And so for us, we feel that we can bring value in the space because it's a service that's definitely required, and we want to bring to the operators the most efficient tax structure. And a lot of that revolves around the proper segregation of accounts and tracking separate lines of businesses and understanding the costs that are eligible to be capitalized into that product cost and thereby come through as a deduction through cost of goods sold. So we're able to draw from many of our previous histories in manufacturing and distribution and rules that apply just in generally other industries that we can bring into cannabis and capture the most of those expenses that could be legitimately supported and capitalized into inventory and therefore expense and help with that bottom line. There just continues to be, though, the disparity between the black market bottom line and those who are, playing by the rules and deducting the proper expenses. And of course, for a dispensary, there's a little less of a window of opportunity for deduction because you're very limited in what you can capitalize into the costs there. So what we feel is that there is a lot of opportunity also for the Internal Revenue Service in this area, and they will be more actively auditing the industry. So what we look to do is to have those proper systems and proper accounting in place so that you can support those challenges. You don't want to be on the far extreme where you think it doesn't apply at all, and that's just not a great starting point. And we also don't want to leave anything on the table where you didn't put your best foot forward and capture what is available to be deducted.
And in fact, I've met, or I've actually talked, there's old wives' tales, but I've met some operators who have said that they have not done the calculation for 280E, because by doing so, then they've admitted that they've committed a federal crime. I think we actually referred one of those to your group. My question to you is, if they have not reported or taken the excessive deductions that they should not have under 280E for the last couple of years, and then all of a sudden you're brought in, how do you handle that situation?
Just if you could restate that. So in the past, they have not applied 280E?
Right. They've been operating for a while.
They deduct everything.
Then they believe that if they were to go through that exercise, and they're admitting they've committed a federal crime, and they don't want to admit they're committing a federal crime, even though they have a state license to commit a federal crime.
Yeah.
But let's just say they haven't paid for the past 2 years.
When you prepare a return, in most cases, a lot of those operators maybe haven't come to a positive bottom line. So although those items were deducted in the past, what they're doing is they're bringing in a net operating loss into the current year. So for us, as a service provider, we do have to look at that, pretty strongly and, understand if we're taking a position in a return that we're not supporting, right? So we want to comply with 280E. We want to make sure that, our clients are in compliance. So as I mentioned, I think earlier, there are some gray areas where, of course, if we can get to a reportable position, and we do in many cases based on each individual's facts and circumstances, if you have a supportable position for why a certain expense is deductible, we take that position. But if it's blatantly a disregard for 280E, I don't know that we're going to get there. And I think one place where we see a lot is where we have MSOs or investment platforms who are acquiring other industries. And through our due diligence, we can determine, those targets, have they been in compliance, and what type of risk are they bringing to the overall organization. We also look at it closely through our valuation process. A lot of times what you're buying is really an intangible. And then the question becomes, can you benefit from the deduction of the amortization of those intangibles?
So if you're engaging in an M&A transaction, acquiring, we always, on the legal side, we always ask for tax returns for the last 3 to 5 years, partially just to make sure they actually filed them. But from your perspective, I'm assuming then it's actually even more important kind of to bring in someone from your team or you and your team to do that deep dive.
Yeah, absolutely, because again, the person who's acquiring that, what kind of history are they inheriting and what risk do they have when the IRS comes knocking on the door? So we do want to make sure that the targets have been in compliance, and if we could quantify, what we think that exposure might be.
So
the other thing that really comes up in audits is not only the 280E, but there's a compliance for cash-intensive businesses.
That's just 8300.
Right, the Form 8300. That is potential for significant penalties.
And can you just explain because I think almost everyone who's an operator should have filed one at one point.
Okay, so the Form 8300 is a form that needs to be reported for any cash transactions over $10,000. And the penalty is per occurrence. So if you fail to file that form, it could be maybe $100 a pop. And then based on the overall size of your organization, the cap on that annual penalty could be anywhere from $500,000 to $1.5 million. So, and you do see the IRS auditors, and I haven't experienced a lot of audits on this East Coast, but more so on the West Coast, where I think there was a little bit more active early on, that the audits there have focused on this compliance with 8300, and it's an easy game for the auditor, right? He's going to get that pop on the penalty for every occurrence. So it's definitely something that you should have internal compliance set up around.
And talking about filing the 8300 for actual cash, that's a good segue to Tina and the banking services that GFA Federal Credit Union have provided to this community. So Tina, you were on a panel with our conference a year ago, as was Jacques, so we should probably have a badge or something saying second year.
Yeah.
But how has the last, when we first talked a year ago, you were about to take in your first client, I believe. So it's now a year later. You have several more clients than just one, obviously. Has it been a success? How many clients have you brought in to date, or how much cash have you handled for your clients?
Sure. Well, thank you, Scott. And I was sitting here thinking about it was a year ago, and just thinking about how much has evolved and changed. And I think that the entire cannabis industry, no matter how you're serving the industry, an operator or an ancillary, there's only one thing that's certain, and that is change. To take someone's description of the cannabis industry, because these aren't my words, but I think they're very appropriate. For us, it was like building a rocket ship while we were in orbit. And I think that that's still true today. So it was about a year ago that we did announce that GFA was getting into serving both the recreational and medicinal cannabis operators, as well as ancillary companies. We have partnered with Safe Harbor Services, so we had a lot of best practices in place, so we certainly don't feel that we came out of the game green, although we still do learn every single day. And then about the same time, the Cannabis Control Commission was issuing their first adult use licenses, so again, reflecting back in terms of just how much has advanced and how much has changed over a relatively short period of time. So we decided to bank the cannabis industry for our primary reason was public safety. You're a cash-intensive business, talk about all of the cash that has to be reported and monitored and tracked, and also managed. And so when we looked at cash moving throughout our communities, we thought, from a public safety perspective, that's just not a safe thing for any of us. And so that was our number one reason, and that was the reason why our board made a unanimous decision to enter the cannabis banking space, even though it is illegal at the federal level, and even though our directors and officers have lost their D&O coverage from the exclusion of serving federally illegal activities, so certainly without risk. But as we've evolved, I think public safety is certainly still number one, but we've also, Scott, you referenced, this is an ecosystem, and so in order for any business to be successful, you need insurance, and you need banking services, and you need a host of other accounting firms and consultants. And we saw this as a tremendous opportunity for us to not only address the public safety issue, but also to, as best we could, normalize an industry that is growing and needs all of the banking services that every other business needs. And we look at the industry as being the most regulated industry that we can bank. So there's a lot of guidance in terms of the role that we play in serving the industry. But certainly we've spent a lot of time just looking at how do we mainstream and how do we make it, you know, you're a high risk, cannabis business operators are a high risk business. And I think that, you know, even with the passage of the Safe Banking Act, if and when that occurs, we're still going to consider or be required to consider cannabis operators as a high-risk business, very similarly to a money service business. So how do we take a compliant, regulatory-focused division of our financial institution and at the same time try to mainstream the services so that cannabis operators can avail themselves of every service that any other business or industry would expect from their financial institution. And what I mean by that is, you know, it was the easier part was to launch the deposit side, give you your checking account, your online banking, some very basic services that we take for granted. What the complexities are is how do we service both sides of the balance sheet? So how do you lend to a cannabis operator, and how do you provide other services like credit cards? So again, referring back to the Safe Banking Act, that certainly will be much more beneficial in terms of not only will we have that, I say, a bullseye on our back and a dark cloud over our heads, not only will those be somewhat removed, but I hope that we find that it'll also open up channels for being able to ride the rails of Visa, MasterCard, American Express, all of your major credit card companies, as well as open the doors more freely to lending. And if I can, I'm just going to talk a little bit about lending because
Please do.
we think about, you know, we've learned just how far-reaching this is. And someone mentioned about the farmer that was advised by their financial institution that now that I know that you're in the cannabis business, we're calling your $5 million worth of loans. And we've seen that, and we've been serving, you know, two legs of a three-legged stool, if you will. So we've been serving cannabis employees and owners and operators for consumer purposes. So if
So
you're...
with respect to that, I mean, part of this ecosystem, I'll just brag for you. You have been providing employees of your clients, of these operators, with the ability not just have their own checking account to deposit their checks, but you've provided home mortgage loans, personal resident loans for them as well.
Yes.
And that way they don't have to go through the stigma of going to Bank of America and saying, I work at Canna, you know, LLC, and they're saying, yeah, not so much. So maybe you could talk about that program as well, because we do talk about lending, but lending is to the entire ecosystem. I know you've done car loans, and et cetera.
Sure. You know, we had a situation where an employee of a cannabis business went to their financial institution, wanted to apply for a mortgage, and soon as, you know, what is your source of repayment? Where do you work? Where's your W-2 coming from? And it's coming from XYZ Cannabis Company. No, thank you. We're not lending. Your source of repayment on your personal mortgage would be coming from illegal funds, and therefore we're not interested. So we do that routinely. You know, that is the easiest leg of the three-legged stool. We'll do that all day long. Not without challenges, however, and we've had challenges in terms of finding title insurance companies that will provide the coverage necessary to finalize and secure that loan. And you know, the easier part of that too is, you know, car loans and banking services. What evolved after that was the landlord, who's not involved in the cannabis industry whatsoever. However, they are deciding that they're going to lease all or part of their space to a cannabis operator. And when their financial institution learns, typically during annual review of the loan, when they learn that the source of repayment is now coming from a tenant who is in the cannabis business. We are seeing a host of commercial real estate loan opportunities simply because the operator is now leasing to a cannabis company and their financial institution no longer wants that relationship. So those are the two easy legs to the three-legged stool. The third is obviously, how does a financial institution lend and meet regulatory and compliance guidelines directly to a cannabis operator? And that's something that through Burns and Levinson, we've been talking nonstop, trying to find a way to launch a pilot program and be able to, because I believe that that really rounds out, if you want a financial institution for your business, you want an institution that's going to be able to provide service to both sides of the balance sheet for your needs. And so that's something that we're working on. And
Maybe next year you'll be talking about
we'll
this
be
right at
talking
this
about
stage.
that.
Yes. So that's a segue. Well, not really, but I'll make it a segue to Patrick. And something that Tina said at the beginning about her board having have issues with their D&O insurance because of the policy that they have. And actually, I was on the phone with their carrier trying to argue why it didn't make sense. And so, continuing the 3C construct, right? Connect and collaborate. We were talking before this. So Patrick, your hub does have a product in which maybe there is better D&O insurance for a company like GFA or any of the folks on here. And maybe you might want to just talk about what you all are doing on the executive risk side.
Yeah, so in the management liability space, really in 2014, we kind of came to a head when London pulled out of the market. And London, by its history, has always been a preeminent player in management liability, specifically D&O. That void was filled by some very suspect players with interesting exclusions, whether it's a federal exclusion, a US-based exclusion for those companies listed in Canada, regulatory exclusions, which bar coverage from companies like or groups like the FDA or the SEC or even the CRA. And what we had to do was go outside the US, Travelers, Hartford, Zurich. Those guys aren't willing to step into this space. And so we found markets in Bermuda, we found markets in Liechtenstein, we found markets in Italy and Spain that were willing to put up capacity. You've never heard of them. I had never heard of them. It was I'm a Million Mile member now after all of my travels to get this stuff done. But we've been in this space for about 5 years and creating products, and specifically around cannabis, federal exclusions, regulatory exclusions, making it real, making it good coverage for the companies that are here. This year, we'll pass over $25 million in claims paid.
Claims paid?
Claims paid.
But insurers never pay claims.
They never pay claims, never pay claims. But that's in securities class actions, and the people in this room know which ones I'm talking about. We understand which towers are getting burned. And then on the employment practices side, in California specifically, if you have employees, you're going to get sued. And so we've got the EPL policies that come into play, and we've literally negotiated settlements of multi-million-dollar settlements on the employment practices side.
And are you starting to see an uptick in D&O claims as
For sure.
more and more, I guess, sophisticated investors get into the game?
I think, one, yes. And I'm actually surprised, given the outset of the turmoil in the markets, that we haven't seen more. I think we'll probably start to see a few more of these actions be brought, specifically from the early investors, right? So you got a Series B that kind of went into the public offering. That's where we're starting to see some activity on the class action side. And
Oh, no, sorry, go ahead.
And the issue that we see with some of our clients that we've brought on in the last, I would say, 18 to 24 months is the way that their policy is structured through the transaction. So whether or not there's tail coverage in place for the raises that happened or the representations that were made going into the raise, it's very interesting to see the different approaches that have been taken.
So I'm being told I have 4 seconds. Unfortunately, we do not have any time for questions. However, the panelists will be around, and the panelists and their companies are all part of our cannabis ecosystem. So I highly encourage folks not to just ask questions, but to see if any of their offerings, products, services may be a fit for your respective companies and businesses. And I just want to thank all of you, all six of you did a wonderful job and made me look good. So that's a hard job in and of itself. So thank you, everybody.
Thank you.
Thank you.
We're going to be going into the next panel in approximately 3 minutes. Please just check your phones, do whatever you need to do.